Yo, this is Stackmode Chris here, man. I'm going to be talking to you guys whether you should trade breakouts or reversals. Now, I do want you guys to notice that whatever system works for you guys, that's what you're going to be able to trade best. Some people have been able to be profitable trading reversals consistently, and some people have found lots of success trading breakouts. Now, I'm going to go ahead and show you the pros and cons of both and what should you trade, okay? So, what is a reversal? So, a reversal is when price decides to swap directions. Okay. So if you guys are seeing down here, if you guys were to go ahead and take a buy down here on this level, then this would go ahead and be a reversal upward. Same thing with here, where price decided to go ahead and fall back down to the near support level. This would go ahead and be a reversal, right? So reversals are going to be when price action decides to go ahead and swap its way, whether bouncing upward or rather bouncing downward, right? So that's what going to be what a reversal is. So a breakout equals a break of a key level of support or resistance. So we're able to use a breakout strategy on the higher time frames to go ahead and analyze, okay, instead of trying to catch the tops and bottoms of the market, like a lot of people here, for instance, market has been dumping for the past few days. A lot of people, I'm sure, have been getting burned consistently trying to catch the top of the market, instead of just playing the continuations downward. So one benefit that you guys are going to get from playing breakouts versus breakouts slash continuations. So the benefits you guys are going to get from playing breakouts as continuations is you guys are always going to be trading with the trend. And when you guys are always trading with the trend and with the current volume, it's a lot easier to go ahead and put in perspective. Okay, so I'm most likely not going to get burned because I'm trading with the current market direction. Now, when you guys do try to catch falling knives like in this, when market is dumping heavy and you keep trying to buy, you're going to get very frustrated when you keep hitting stop loss. So, but that's why I definitely do recommend you guys try and trade breakouts, for example. So as you guys can see here, using this candlestick analysis right here. Boom, we did have this daily candlestick that decided to break out, and then price decided to go ahead and dump down. So let's go ahead and see what this looks like on the smaller time frame. So if I put a red line here on the screen here, I can see on the 4 hour that we had a 4 hour bounce here in the morning. We'll go on the 1 hour candlestick. So we had a bounce here, letting us know that once we had a breakout of this bounce, then we would be able to go ahead and get in for a profitable trade. And as you guys can see here, even if I scale down to my even smaller time frame here, and I turn off my indicators so you guys can see it clearly, you guys will be able to see here, boom, market decided to go ahead and break out. You guys would have been able to go ahead and get in for an entry, and then price decided to create some structure and then decided to go ahead and dump back down. So from here, for instance, your stop loss on a breakout setup would be, let me just go ahead and log into paper trading account here. So let me go ahead and just see here. So if you guys were to go ahead and enter, let's say down here, then you would want your stop loss to be somewhere fairly high, fairly decent. So you guys would be able to go ahead and have a nice amount of range and stuff like that. So you want to go ahead and set your stop loss up, and then you'd be able to go ahead and get in for the breakout setup, and then go ahead and take the trade all the way down. So ideally, your entries want to be where everyone else's stop loss is. So regardless if you guys are trading a reversal, let's say you guys shorted all-time highs, right, all the way up here. Then ideally, let's say you entered about right here for a sell setup, then you'd want your stop loss to be on top of that, right? So this is how your stop loss would be for a reversal setup. It's going to be either on the top, or let's say you took this buy over here, it's going to go ahead and be on the bottom, and stop loss would be beneath the reversal setup, okay? That's going to be that. So, and as far as for breakouts, your stop loss is going to be a little bit different. You're going to want to go ahead and get in as soon as price decides to invalidate itself. Make sure you guys have like a decent stop loss as well. Sometimes your stop loss might get hit depending if there's news or not. So make sure you guys want to watch out for that. And then boom, go ahead and have your stop loss, and then price will go ahead and travel back down once the level decides to go ahead and get invalidated, right? So inshallah, that's what you guys want to go ahead and just continue to do. Sometimes your stop loss might get hit, but that's completely fine. That's how trading goes. Other times, price is just going to completely invalidate itself and clip down instantly. And then you guys are going to be able to go ahead and get in for a really nice setup. So ideally, what's really going to be better? So remember, your stop loss is going to be different depending on the type of setup that you are taking. Um, but reversals or breakouts are both great to trade. Just one thing you guys might get frustrated with is reversals. Now, reversals are absolutely fantastic to trade, but if you guys are going to trade reversals, I do recommend you only trade reversals off of a higher time frame setup. So, for instance, if I'm going to go ahead and try and predict where market might go ahead and bounce up, I would probably go ahead and mark out this zone of resistance over here on the weekly, see where price decides to create structure, and then I would scroll down to my smaller time frame and see what price action is looking like over there. So let me go ahead and see what it's looking like on the daily. I see some very strong resistance. You can also use the swing points and liquidity by Leviathan and pivot points, high and low indicators, as well as the tape too when market is open, to go ahead and see the volume and how it reacts. So ideally, I probably think market might bounce up here, but that's just the most probable area that I can see on the higher time frames, is that price might decide to bounce within this shaded area here, and then price might decide to go ahead and continue up. But if not, then you guys will decide to keep catching falling knives. Whether you guys can go ahead and wait for price to create structure, or you can go ahead and do this and be like, okay, so if price already created structure within itself, and I see that price has a potential to go ahead and bounce here, you could wait for price to bounce, create some resistance here, since we know that this key zone works. So price might go ahead and bounce and create resistance up here, and price might fall back down, and then you can go ahead and take the breakout setup again for the continuations back up. So you guys can just decide to be a little bit more patient if you want to go ahead and play continuations and breakouts. But one thing I'm going to tell you about breakouts is that your win rate will probably be a lot much higher. This is because you're able to use the tape indicator, and that sometimes on reversals, they can go ahead and take a long time and try to fake people out and make people hit stop loss before the actual move happens, and that's where you guys majority might crash out your account or lose a lot of money trying to catch tops or bottoms, right? But when you guys are catching breakouts, you're able to clearly see, okay, so for instance here, if this top was invalidated, then you guys would be able to go ahead and get in right here at the top of here for a breakout setup. So as you guys can see over here, price decided to break above this level. Boom, price retraced down a little bit, didn't quite hit a stop loss, and then price decided to continue to travel up. So when you guys do take breakouts, it's a lot more probable, and you guys are able to go ahead and analyze your setups in a completely different way. Okay? So that's what you guys want to make sure that you're doing. You want to make sure that you're just analyzing tops and bottoms, and your entry should be where people's stop losses are. Okay? So wherever people's stop losses are, that's most likely where you're going to be. Your entry is going to be a lot of the times. Okay? Because a lot of people have their stop loss too close, and that's really where they get burned within trading. Okay? All right. So yeah, once again, guys, a reversal equals a swap of price action depending on the current direction. Okay, so that's going to be what a reversal is, and that's going to be what a breakout is, guys. All right. And remember, you want your stop losses. So if you guys are trading a reversal, you're going to want your stop loss to be on top. And if you guys are trading a breakout, you guys are going to want your entries to be as soon as the level gets broken, and your stop loss somewhere within that range that makes sense with your risk reward. All right. I'm going to catch you guys in the next one. Stackmode Chris here. Peace.